This is the Chappell Real Estate Show, episode number 23.
It's just a great time to sell. It's a very strong seller's market. But when you also couple that with low interest rates, and I do mean historically low interest rates, that all equals higher prices on the market. It's actually very simple. It's simple economics. Low supply, high demand, low interest rates equals much more money typically for a seller.
Welcome to the Chappell Real Estate Show, your source for the latest real estate information so you can buy, sell, and invest with the best in Texas. Whether you're a first-time buyer, a current homeowner, or a seasoned investor, you've come to the right place. We're here to simplify all things real estate so you can achieve your goals of property ownership with your hosts, Daniel and Roger Chappell.
What's up, listeners, and thank you guys for tuning into the Chappell Real Estate Show, your source for the latest real estate information so that you can learn how to buy, sell, and invest with the best. I'm your host, Daniel Chappell, and I'm here with my co-host, Roger Chappell today. How's it going, Dad?
Hey, everybody. How are y'all?
Oh, we're doing great. So today is, yesterday was officially the first day of summer. So here in Texas, that means that we're all boiling. I don't know what that means for the rest of you guys around the country, but in Texas, it is really, really hot. So we got to spend this last weekend, spent some time with the family around at the pool and had a good time doing that. So we're excited. We're glad that the summer's here. The summer also means that it is a even busier time of year for us with our clients. So today we wanted to bring a little bit of an episode for you guys. So last week we talked about keeping buyers encouraged in this crazy, crazy market. So today we wanted to talk about sellers. So sellers are now in a position where things aren't exactly what they were 2-3 months ago when we released our last episode about what it's like to sell in today's market. So we wanted to kind of give a little bit of an update, kind of talk about how the market has changed from the selling side, and kind of dig into some of those details. So Dad, let's first kick it off with the Chappell Chunk. What is today's Chappell Chunk?
Well, today's Chappell Chunk is happy birthday. For folks that don't know, Daniel celebrated his birthday yesterday on Father's Day. And coincidentally, he was actually born on Father's Day 28 years ago. So to all of our audience and people listening out today, happy birthday.
Well, thank you, Dad. I appreciate that. Well, let's go ahead and dive into our first topic of the day. So the first thing that we're going to talk about is why should we sell now? So, Dad, I'm going to kind of let you lead that one a little bit, and let's kick it off.
So just like a couple of months ago when we addressed this, still we have pretty much the same three reasons. There's low inventory. Because there's low inventory, it's just a great time to sell. It's a very strong seller's market. But when you also couple that with low interest rates, and I do mean historically low interest rates, that all equals higher prices on the market. It's actually very simple. It's simple economics. Low supply, high demand, low interest rates equals much more money typically for a seller. So that's literally the primary reason. However, another reason to sell would be for sellers to try to take advantage of that equity. So not only is it a strong seller's market and people are getting more money for the homes today than they ever imagined, but now they can take that equity and use it to either upgrade, or they can, this actually leads us into the third reason, they can upgrade, they can downsize the home, they can move into a better neighborhood. Who knows? There could be a number of reasons for someone wanting to move or change their location. Maybe a bigger home, maybe a home with an office. Who knows? With COVID striking us the way that it did and shutting down the economy the way that it did, it forced everybody to now focus on what they can do for themselves.
No, that is a really great point. So how has this market kind of changed a little bit from the seller side since what we were dealing with I think we released that episode, and maybe it was one of our first 5. So it's been probably 2 or 3 months at least since we released that episode. So how have things kind of changed?
So primarily, we've seen prices actually jump. So what does that mean? So I'll give a very generic and general answer to this as an example. So let's assume that you had a home that 6 months ago was valued at $200,000, and you talk to your real estate professional, and the real estate professional says we need to list the house at 199. So you list the house at 199 because at the time that's what it should appraise for or get pretty close to that. So that's where you list the house, and then lo and behold, you sell it for 3.25. Now, who would have imagined something like that happen? $325,000 for what typically is a $200,000 home. Well, the trouble during that time was that house was never going to appraise, ever, because the comps just were not there to be able to justify a price at that point. However, now what we're seeing is many, many homes have sold at those higher price points. So now we're seeing homes being adjusted to that upper price point. And once that has occurred, now we're seeing more appraisals. Actually, more of these homes make appraisal at these higher price points, which is not something that was the way it was three months ago. So now we're starting to see that part of the market catch up. And what that has caused is a slowdown in buyers jumping on these homes so quickly. So it's been an interesting little dynamic, and I'm hearing from more and more listing agents now that the homes aren't selling quite as quickly as they were. Now, mind you, we have to put this in perspective. Quite as quickly means, in the typical market over the last 3 months, we could get a home sold in about 4 days, 5 days, and that gives us through the weekend, through one weekend. That's not the case anymore. Now we're starting to see homes sit there on the market for 2 weekends before they actually go into contract. And the reason being is that now they're at a much higher price point, and that reduces the number of buyers that are actually taking a look at those higher price points. So you have a smaller buyer's pool. You're still getting very serious buyers submit offers, and most of the time they are still wanting to pay the sellers, or at least a portion of the seller's closing costs and a number of other things. So that is still indicative of a very strong seller's market. So that's just kind of where we're at the moment.
Yeah. Well, I mean, I think that's a really good assessment. And, I'm glad that you brought up the appraisals, because that is a huge thing. I remember when this thing first started ramping up, that's what we were mostly concerned about, is none of these homes are going to appraise based on what appraisal practices were, when this market started. Because it used to be we looked at closed inventory. That's how they figured out what a home was going to appraise for. So I think we've kind of touched on this a little bit in a previous episode, but I kind of want to, mention it again on this episode because it is very relevant. But how have those the appraisers kind of shifted how they're working to accommodate for this, drastic raise in prices?
So that's a good question. I had a conversation with an appraiser at a home where he did an appraisal. He had an assistant with him, and of course, during that conversation, he mentioned to me, or he asked me specifically, how many viewings we had and how many offers we had. Now, mind you, this particular home had been under contract twice. And the first time it went out of contract the day of closing, which was more than just a little disappointing. But when it went out of contract, we turned around and we put it back on the market, and we had a similar number of showings and a similar number of offers. So with that, the appraiser was allowed to use that kind of information to kind of help him give a true direction of where that appraisal was headed. So, and not only that, it gives him a market snapshot of what a buyer may be willing to pay for a home. So I think with that, and this doesn't happen all the time, but was very fortunate in that particular instance where we were able to get the appraiser to have that kind of a conversation with us at least, and take that information and use it in his equation to help evaluate the home.
Yeah, and I've noticed with some of our other deals too that is becoming a little bit more of a common practice with a lot of appraisers. So, I think at the end of the day, everybody in this business wants to help, and if 20 buyers are saying that a home is worth this much, it's hard for an appraiser to look at that and say, no, it's not worth that much, if that many buyers are willing to pay that price for that home. So, I think that's it's definitely helping to stabilize the market a little bit. I think it's also helping to this kind of brings a different thought to mind, but I kind of noticed that I think the homes that are still hitting the market and they're really nicely staged, they look great, they do all the things, professional photography and decluttering and all the things that we talk about preparing a home for sale. And I think that those homes are still going very quickly in 3-4 days. I think the homes that are listed right are still moving very quickly. But the homes that, it used to be you could take one picture of the home, just the front of the house, and you'd get it sold in a weekend. Well, I think that kind of has slowed down a little bit. What do you think?
Yeah, no, I agree. I think no matter what, a home has to be professionally marketed. And if it's not professionally marketed, you're just not going to get the same attention. It still baffles me to see some of the marketing done for some of these homes, and the price points just continue to rise. And I continue to see realtors try to shortcut their listings. I just don't understand that. That's just not a business model I agree with. It's just not. But as long as the seller is willing to do that, and the sellers have to understand what their expectations are too. So I think, and this is part of the reason we're doing this particular episode, is to kind of set the bar and let sellers know, you do have a level of expectation that you need to be aware of. So, why sell now? We got that. As a seller, what should you expect as a seller? So for me, number one is you have to hire a real estate professional. And Daniel, you transitioned into this one very smoothly, in that when you have the right real estate professional working for you, then you will see that house marketed, and it typically will go much quicker. It'll definitely get more attention than a home that's not professionally marketed. And that includes professional photography. It includes video, if you can get some video established, and some of the other marketing trends that we see across the industry. So, yeah, I think that has to be done. The other thing that has to be done is I think it's very imperative that the real estate professional have a very frank discussion with the sellers regarding the price of their home. And we've had this, you and I had this conversation when you were trying to sell your home. And you're in the industry. So because of that, I think you and I could have that frank discussion very easily. But what about people who are not in the industry and they know that their neighbor just sold their home for $600,000 and they think that their home is a $600,000 home, when all the data and everything, all the research that I've conducted shows that it's actually a $500,000 home? Well, you need to hear that as a seller. You need to have that expectation that, just because that neighbor's home sold for 600 doesn't mean that it's a really good comp to your home. There could be a number of differences that cause that home to sell for 600 and yours only 500. Most of the time that has to do with size, and most people have no idea about that. But it's not just size. What about the material that's within that size difference? What does that mean? Let's assume you have a 4-bedroom versus a 3-bedroom, and there's a 400 square foot difference between the two homes. Well, to me, those are not going to be good comps. Number one, the size of the home is just big enough to where I probably wouldn't use that. So that's important. And as a real estate professional, I'm not going to tell you what you want to hear just to get a listing. That just doesn't make sense. I'm going to tell you what you need to hear, because if I'm working for you as your fiduciary and as your confidant and as your professional, you need to be armed with the best information possible, and that includes the bad news, or it includes news that you may not be prepared to hear. So those are the kinds of difficult conversations that we have to have sometimes. But fortunately, most people, once we have that conversation and we can support what we're saying with the true data, and we show them the true comps, and we explain to them the process, then we have set that expectation. Now, once that expectation is set and we come up with a listing price, that doesn't mean that that's how much the house is actually going to sell for. Listing it versus selling it are two different concepts. They're two different things. A listing price is what the market at that particular moment says that we would price it for, but that doesn't mean that that's how much the market is ready to pay for it.
Well, and I actually have something else to add to that, and that's that, and I've been working with a lot of buyers the past few weekends trying to utilize the strategy that we talked about in our last week's episode, trying to find some homes that, sat over the weekend and try to get them under contract during the week when buyers are a little bit less active. So I've noticed that a lot of agents are starting to, I don't know if they're doing this to generate more activity or if they're just not looking at the comps the day of the listing or what, but I've noticed that there are a lot of homes that are being listed at what they should have been listed at a couple of months ago, and they're not taking into account the most recent comps. And that's kind of throwing a wrench into things, because there's still homes that are being listed $50,000 below what they should be, and they're selling for $100,000 over list price. So that's where I've been coaching my buyers that the sales price and the list price, they're not any indication of one another at all. Because a lot of times agents use different strategies. Whether I agree with those strategies or not is beside the point. But some agents are using strategies where they list below market so they generate more activity. The trouble is that it's activity from buyers that aren't qualified for what that home could possibly sell for. So that's kind of been something that I've noticed a little bit in the market as well.
You bring up a good point, and I know as a listing agent myself, when I list a house, I prefer to have a realistic number, if it's possible, to have a realistic number. Now, sometimes these buyers come in with exorbitant amounts of money, and they're looking to pay a lot for a house. We can't control for that. But what I can do is, if we list the home properly at an appropriate price, we will cut down on those non-serious buyers. And as a listing agent as well, one of the things that my job is to filter through some of these offers. So just because we get an offer doesn't mean I'm going to call the seller and say, hey, we just got an offer in hand. Well, I might not. It just depends on what that offer looks like and that sort of thing. So that's kind of, as a professional, one of the things we do is kind of filter through them. We also need to make sure that the offer, when presented, is completed correctly. So if there's misspellings, if there are errors on the contract itself, we want to try to have those things corrected before we actually have a ratified or an executed contract.
Yeah. So let's kind of talk about running numbers on, we've talked about properly listing the price, and price is extremely, extremely important when it comes to listing a home. But what about the different numbers associated with those homes? When you're working with offers that are coming in, what are some of the things that you're looking for on those offers?
That's a great question. So when you're running the numbers, as a seller or a listing agent, there's two similarities, but they're also different. So as a seller, you want to run the numbers so that, and your agent will be able to help you with this, you want to run the numbers so you'll know exactly what you're taking home after your home is paid off, after your portion of the closing costs are paid, and that sort of thing. So we actually have a sheet that we can use to help run those numbers and let you know. But one of the other things that we do too, as far as running the numbers are concerned, is as the listing agent, I need to know how much the HOA dues are and what the frequency is of those payments. Is it quarterly? Is it semi-annually? Is it annually? Is it a monthly charge? I need to know that because that's going to also help me calculate how much you as the seller are already into it for the HOA fees. I need to know what the tax rate is, and I can actually get that from the tax records. Then I need to know not just the tax rate, but what are the tax exemptions that a seller has on a particular property. And in Texas, those exemptions can be a number of different things. So I want to make sure that I have those exemptions already so that I know if I've got another potential buyer that's coming in and they're asking those kinds of questions, that I can provide that kind of information to their agent, and hopefully the agent will be able to have that information anyway, because I'm going to try to provide it to them as best as possible. And then the other thing too is, of course, of homeowners insurance and things like that. You really do need to know how much you're into that for, because all of these things get prorated. What does that mean? Well, that simply means that as the seller, you're responsible for these kinds of costs up until the date of closing. And the buyer is responsible for those costs after the date of closing. So with all of that, all of that goes as far as these numbers and helps you calculate pretty much, you can get it almost down to the penny of what you actually owe, so that you can calculate what your true cost is of selling the home and how much money you're actually going to pocket so that you can use for your next venture, whatever that may be. So that's part of those running the numbers. But I know you have something else too on that, right?
Yeah. So when it comes to, you mentioned the tax rates, the insurance, the HOA, and all that stuff. When it comes to those offers as they're incoming, what are some of the expectations that a seller should have as far as, I mean, we've talked about some of these, crazy offers that the buyers were putting into the market are kind of slowing down a little bit. They're, maybe not offering to pay the owner's title policy as often as they were before. So what are some of the other things that you're looking for in the contract that could make an offer stronger than another?
That's a really good question. So in Texas, we have so many little details in these offers and these contracts. So now, keep in mind, an offer does not become a contract until it's executed. So we may get an offer and we get all these addendums and addendums attached to it to explain what it is the buyer is willing to do and what they expect the seller to do. So in a typical market, in a standard market, when you have pretty good inventory and which we don't right now, we are definitely in a different type market. But in a standard market, for example, title insurance was typically a seller's expense. What that means is that typically the seller would pay the title insurance. Now, mind you, that is regulated by the insurance. I forgot what it's called. The insurance agency with the state of Texas. So these rates are actually set and they're standard. They are not. You can shop around for those rates, and it'll be the same rate at every title company. So it's not one of those rates it's not one of those fees that you can actually shop and get a cheaper rate. It's standardized. So with that said, that used to be a seller's expense. That is no longer the case. Now, typically, buyers are choosing their own title company and they're paying for their own title insurance. So with that being said, typically, that's one of the things I look for, though, is the buyer paying for their own title insurance. If they are, they're choosing their own title company, and that's where we're going to go. So that's an important fee. They also, like in Texas with HOAs, there are typically transfer fees and there are some buyer's fees, standard buyer's fees. And again, standard is used loosely only for this conversation because there is no standard like this anymore. So typically now the HOA fees are being covered by the buyer as well, but only up to a certain dollar amount. So there have been some other dollars amounts that it just depends on the HOA as to how much those fees are. Now, I have seen sellers wind up very upset because they have to pay a very large sum towards HOA fees once the transaction gets to the closing table, and these fees they were not expecting. So we want to try to figure those fees out to the best of our ability so that the fees at least get, and again, this is all about negotiation, where we get the fees at least split between the buyer and the seller. But sometimes the buyer picks up the entire thing. And there are so many other little details in a contract that have money attached to them that make a big deal towards a purchase or a sale of a home. So part of my job is to go through all of those things and understand, because in each house as well, each cost, each price on a house affects the cost that you're going to pay on these fees. So some of them are on percentages, some of them have a flat fee, but the majority of it are based on percentages of the price of the house. So if that's the case, I can get you in the ballpark, but that doesn't mean I'm actually going to be able to give you the actual number.
Right. So for a seller, once they're under contract, how many different ways do they have of backing out of a contract? Are there any ways for them to rescind? A buyer can rescind their offer with multiple different outs in the contract. So what does the seller have if they decide that they maybe don't want to sell their house?
Very, very, very few in the state of Texas. So basically, I tell my sellers this. Once they decide to list their house and they sign that listing agreement with me, the house is no longer theirs. It's time for them to let go of it. The house is no longer theirs. They're preparing to let that house go to someone else. They need to take their emotions, because a lot of times these folks, their kids grew up in the home. They truly have taken this property and turned it into a home. Well, now it's time for them to let that home go. They have to release that emotional attachment, and that helps them make better decisions later on, because then they're not emotionally attached to that home. So with that said, once they get a contract and they sign that dotted line that they're willing to sell to this particular buyer, then there are very few ways that a seller can get out of the contract. But there are some opportunities where they can basically force the buyer to rescind their contract. So there are some things that they can do. Now, I don't recommend that typically. I just don't. But you just never know. There might be an opportunity come up where, maybe you should let that contract go. Maybe you should force it into some sort of a breakup, if you will. But not all the time. Most of the time, you want to try to get it done.
Okay, well, that's good to know. So what about repairs? What kind of, how does the process go for repairs? I know we briefly touched on this in the buyer episode last week too, but as a seller, what kind of expectations should you have when the buyer approaches you with a repair amendment after you've signed a contract?
That's a great question. So in today's market, most sellers are getting very minimal pushback on repair amendments. So in the past, I have seen some very lengthy repair amendments where a buyer wanted a number of things taken care of. And, a lot of times we can negotiate those things out and it wouldn't be a problem. Nowadays, I'm seeing these repair amendments come across with much fewer requests for repairs. But that's not to say that the buyer doesn't want some of these things done. And really good examples of that are water heaters, your major big ticket items. Water heaters, roofs, foundation, plumbing issues, health and safety, all of those kinds of things are things that as a seller you really do need to pay attention to. So let's assume that the buyer comes in and now they want either $20,000 off the price of their home or they want 100 items fixed. Well, in something that's that extreme, it might be worth it to let that one go. And at that point, then the seller would have some leverage where they could say, you know what, we're not doing anything. And they can force the buyer into rescinding their contract. And if they do, we put the house back on the market. But keep in mind that now we know about some conditions of the home that we didn't know about before. So we have to disclose those, which means we may have to do a supplement to the seller's disclosure. If there's been an exchange of an inspection report, we may need to release that inspection report to the public. There's some other liability that we really do have to look at and make sure that we disclose. So we want to disclose any issues that came up. Sometimes, though, a buyer will rescind their contract just based on they saw the inspection report and they just got spooked and they didn't share anything and they decided, you know what, for this amount of money, I'm not going to buy this kind of house. I have to put too much into it. No harm, no foul. They withdraw their offer and we put the house back on the market. So there is that kind of thing too. So when the repair amendment comes in, there are 4 different things that you can do as a seller. Number one, you can accept the repair amendment. And I've seen that on a number of cases or on a number of transactions where we receive the repair amendment, I would present it to the sellers, and the sellers immediately sign off on it saying, yes, I will take care of all of those issues, which is a really great thing to see. There's very little negotiation back and forth. And a lot of times when I'm hearing this from our sellers, it's because they really want to give a good quality home to the buyer, especially considering how much these buyers are paying for homes today. So the sellers actually have a really good mindset about that. So, for our buyers, as we represent both buyers and sellers. So when I have buyers that have specific issues they want to be addressed, then we go ahead and we present those and we try to negotiate them out. The second thing you can do as a seller is to reject the amendment outright. And you can do that just by simply saying, I'm not doing anything to this house. They're buying it as is. So the buyer can choose to accept that rejection and continue to purchase the home, or they can say, okay, that's fine. They can withdraw their offer and you put the house back on the market and find another buyer. Another thing that I've seen happen on many occasions is, especially with a conventional loan, is the seller could offer money towards closing costs. So let's assume for the sake of argument that it's going to cost $2,000 to do this list of repairs. And we have the proof to show that. We've been talking about this back and forth, and the seller finally says, you know what, I'll pay the buyer $2,000 towards their closing costs to make this repair amendment go away. And typically we can negotiate something along those lines out. And at that point, the buyer accepts it and we move on towards closing. Finally, the last thing you can do is negotiate repairs or money or both. And I've had this happen a number of times where the seller will agree to some repairs, but they will only put money towards some of the other repairs. And there are a number of factors that go into that. It could be when is closing happening, when are they actually moving, Do they have the time to be able to take care of some of these things? All of that goes into play, and that is literally an individual decision. It depends on the seller's and the buyer's position at that time and what they can do at that moment.
Absolutely. So there's one other thing that is very common in today's market, and that is the seller leaseback. So why don't we explain that a little bit to our listeners? What is the seller leaseback? How long can it be? Because I know in different scenarios it can be longer than others. So let's explain that to the listeners a little bit, since that is still a very prominent thing we're seeing in the market right now.
Yeah, so one thing to keep in mind is that everything that we're talking about right now, the repair amendments, the leaseback, all of that is money. When you boil it right down to it, it is money. It's either going to or being taken away from the seller. The buyer is either providing it or they're not. So it's all about money. It truly is all about money. And all of that does affect your bottom line, whether you're the buyer or the seller. So what I'm seeing now in a lot of instances is buyers willing to offer the seller a free leaseback up to a term that is conditioned or is conducive for their loan. So some of these folks, if they're a cash deal, they don't necessarily have to do a leaseback for a certain period of time. If it's a cash deal, they can do a leaseback indefinitely. Now, as agents, our paperwork will only allow us to do up to 90 days maximum. After that, then a regular lease agreement has to kick in, and then that is between the landlord and the tenant. Us as real estate agents are completely out of it at that point. So, typically you'll find these things actually no longer than 59 days. Why 59? That is such a weird number. Well, 59 because in most loans, the buyer who obtains a loan has to occupy that residence within 60 days. So if that's the case, then we want to make sure that at some point before 59 days, that the buyer is actually able to move in and occupy that residence. So typically we'll see the leasebacks go up to that 59th or 60th day, so that on day 60, the buyer is able to actually occupy that residence. Now, when I say that there's money involved in this, think about this. Let's assume that you do a 60-day leaseback, and I'm doing 60 days, which is on that 60th day, that buyer's moving in, the seller's moving out. They get to wave each other and high-five each other in the driveway on the way in and out. Now, with that said, the buyer, by that point, has probably already made their first payment. If their first payment is $2,000 a month, well, there might be in that leaseback a fee that is charged to the buyer. To the seller. So the seller will actually become a tenant in their own home and pay a fee so as the buyer does not lose any money. Does that make sense?
Yeah, so to put it in another way, basically when the closing date happens, the seller then becomes the tenant, the buyer is now the landlord, and the seller essentially could pay rent for the time period that they're still occupying the home past the closing date.
That is correct. That is a great explanation of that. So with all of that, that all comes down to money. What does it mean to the seller? What does it mean to the buyer? And again, this is individual transactions. Each transaction has its own individual thing. So just kind of keep that in mind.
Yeah, absolutely. So now what happens if the seller decides they don't want to vacate the property? Because I know we've actually seen articles. Thankfully, we haven't personally dealt with this with any of our clients, but we've read articles. We've heard of stories of this happening in other states and in other transactions. So what are the repercussions for the seller if they choose not to vacate the property?
So this is another one of those things that is state specific, and each state has their own laws regarding this. In Texas, at least on the leaseback information we have, it's the addendum for seller leaseback. On that addendum, we put in there the lease, which includes a deposit. The deposit can be, and for the sake of conversation, we're going to say $1,000. That's just as an example. So the new tenant pays $1,000 in the deposit. Then it's time for them to leave, but they have to extend past the 45 days. We'll assume we negotiated 45 days. Well, they have to stay beyond that 45 days. So, and the reason being is, the movers got delayed, or, who knows, any number of reasons could it cause them to extend. Well, typically in our leasebacks, we already have in there a fee that we will charge in addition to, and it's usually a pretty high fee to stay past that date. So if it's a free leaseback for 45 days, on day 46, it's going to cost you $200 each day that you stay past that 45 days. So it behooves the seller to get out of there as soon as they can, because it winds up costing them quite a bit of money very quickly. So that's one repercussion. Additionally, in Texas, we are a property owner's state. What that means is property owner's rights state. What that means is the property owner basically calls the shots on that. So once the agreement has expired, and let's assume we get to day 60, and this buyer is no longer, now the landlord is no longer able to move into the house because the seller has refused to leave. Well, in Texas, all he has to do is go and file a 3-day notice to evict, and an eviction will take place. The sheriff's department gets involved and can forcefully remove those people from the property. Now, that is the worst case scenario. It could happen that way. It most likely will not. Typically, just the higher fees at the expiration date of the leaseback is sufficient enough for sellers to go ahead and move out.
Great. Well, I'm sure that's a little bit comforting for some of the buyers that are, offering leasebacks. I know that it's not a very common occurrence, but it does happen. So it's good to be prepared for those kinds of things. So, now we've gotten past the leaseback period, or rather, if there's not a leaseback, then it's at closing and funding. What happens at the closing and funding?
So once the seller has been given the date that, okay, we're closing this afternoon at 2 o'clock, they should provide all keys to the property, all remote controls, all security type access. If there's a security passcode for the alarm system, or there's Wi-Fi passwords, or some sort of a password to get into some Wi-Fi protected, password protected app. Things of those nature, then as the seller, you want to provide all that to the buyer to allow them to do what they need to do to access the home. And then, of course, you get paid. You get paid. You get a big fat check, and your mortgage gets paid off. And then you're able to take that money and roll it over and do whatever it is that you planned on doing with that money, whether it's buy another home or a vacation home. Who knows? Who knows what you're going to do with it?
That's awesome. Yeah. Well, that's the best part, right? When you get the money into the bank account, that's when it becomes real. So that's always I can speak for that. We were just there a couple of months ago, and that was a great feeling when I saw that deposit enter my bank account.
Yeah, it's a great feeling. And one of the biggest bonuses that a lot of buyers have is at closing they find out that they actually have a home warranty on their home. And I'm talking to a lot of realtors that they're not making that part of the contract. Instead, they're buying those home warranties for their buyers, which is a pretty nice thing to do. We've done it on a few occasions. It's not something that we do on a regular basis because a lot of our homes, to be honest, don't need home warranties. And a lot of buyers don't want the home warranties either. But it's nice to find out that you have one. I remember when you bought your house years ago, your realtor bought you a home warranty and how pleased you were with that. And so that's always a nice little thing to have as a bonus, I guess.
Yeah, that was definitely a nice plus, and we got our money's worth out of that home warranty. That is for sure. Well, that pretty much covers everything that we had in store for you guys today. So kind of just to summarize, the biggest thing that I want to put a little bit of emphasis on is that sellers' expectations in the market, not that they need to go down drastically. It is still a very strong seller's market, but the days of expecting $50,000 to $100,000 over list price and expecting the buyers to pay for all these different things and for the seller to hold 100% 100% of the cards during the transaction. I think we're starting to see a stabilization in the market that is shifting that dynamic a little bit. So, all in all, it's still a very strong seller's market. It's still a great time to sell your home, and we are still desperate for inventory in the market. So if you're interested in selling, please contact us and let us know how we can assist you. But really, the biggest thing is, manage the expectations. If you're working with a professional realtor who can assist you throughout the process and guide you and offer you the right counsel, then you're going to be in good hands. But just be advised that this market is continuing to shift. It's not exactly what it was 3-4 months ago when this thing started going crazy. So, but Dad, do you have any closing thoughts for our listeners today?
Referrals. I think I got that right. Referrals.
Referrals as always. Well, thank you guys so much for tuning into the Chappell Real Estate Show. Again, we love spending time with y'all. So let us know what you want to hear about next. Please visit us on YouTube. Find us on anywhere podcasts are found, Anchor, Spotify, Apple Podcasts, and share us with your friends and family. Anybody who's interested in learning a little bit about real estate, whether it be on the buy, sell, or investing side, we are happy to provide as much knowledge as we can. So we look forward to seeing you guys on next week's episode, and we'll talk to y'all soon. Take care and have a great week.
Thank you for joining us this week on the Chappell Real Estate Show. If you enjoyed this episode, share it with a friend and leave us a review. Find us on social media at Chappell Realty Group and online at chappellrealtygroup.com. Until next time.